Jamar, let me ask you a quick question. If we trade momentum and you say the market falls faster when it's going down than going up, why is it we prefer when the market is green? Is it trading against a trend? Okay, if we're
I mean, for me, it's because I got used to calling things out. So I want guys to be able to get into it throughout the day. But overnight, you get into a short, you can't get out. So when in day trading, when it falls that day and you can get out that day. Right? Because normally, and you can have unlimited losses overnight. So if you're in a short and it flips over and they have some good news or a CEO comes out with something, you can't even get out of it until the market opens.
Mhm.
Right. So it's rare. I mean, to me, it is, you can hold even if it bad news overnight and you long, you down, but you still got the stocks. On the flip side of a short, if it has good news and it reverses, you're gonna be stuck and there's nothing you can do after hours. And it could be unlimited as far as how much you can lose. They can have a buyout. Huh?
What about day trading? Because I never hold anything overnight. I'm in like 5 minutes, 15 minutes.
Yeah. So yeah, I mean, so you can say, hey, I'm gonna go short. It's hard, because I have guys that'll get in, they'll get greedy, they're traders and they'll stay in. So for me, it's been safer calling out things that are long, but the money is, when the market is short, you can make a lot more. Like that Canva that we just seen, it had some bad news or it had something for it to be going down that long. Right. Right. So if someone had alerted us in the group and they watching this and we seen that they had bad news and it's been trending down that long, I mean, it's going from, that's a hell of a, opportunity. Right. And you get short there, you good. But because I don't trade I don't look at all of it because the market could also turn and it's hard for me to track everything. So for me, I track the things that we can make money on a daily. I know you guys do the Amazon, the Apple trades, the Tesla. Those are things you can do weekly. This something is, what news do you have on this, Kim?
Well, it looks like the company is getting into a bad financial situation where they're just losing a lot of funds according to their balance sheet, and they're looking at bankruptcy. So I was wondering, is there like a mathematical metric that you use to say, okay, after it gets below this point, then we don't touch it because it's too close to bankruptcy? Or because I anticipate a lot of companies are going to be taking these massive dives during this down economy, and I'm just wondering, what is your?
If someone were to point this out and ask me, but it is. If I'm trading futures, I'm trading, stocks, options. Sometimes if they ask like this, that's why I say the mastermind is beneficial. We have a call like this and you say, hey man, like Canva is in bad shape and we just talk about it. Then it's all right, where should we stop? It's like, well, it's here at 498 and it's been dropping all the way. And then 2 hours ago, they have an article says it's named the worst financial company of the year. Shares down 98%. It's like, well, damn, did we miss it? Or is it still worth taking a short? Now, I wouldn't have put a bunch of funds in, but if it was highlighted, back here in August, I mean, and you, put a short in and you start seeing it cross down on the alligator, this tells me it's trending down. That was a short squeeze and it's still been trending down. So watching it on a weekly, right? I mean, like they're saying week over week, it hasn't had really no green. So then getting down here, it's like it's still above average selling. And this is the biggest candlestick, as far as the volume. They're still selling off. And of course, if it gets the worst company of the year, you always have some optimistic. We know the first 2 weeks of December was going to be kind of bearish. That was a perfect opportunity to still get in this. Now we're going into a seasonal pattern that the last 2 weeks are bullish. I probably would stay away from it now. or trade it a couple more days short and then get out of it, before any bullishness is expected.
I will add that I think what Kendall might be asking about too, maybe the answer to the question may be open interest. Because I know I was on Brandon's call, I think Thursday or something, just as basics. And he was talking about, I think it's open interest that is the metric that you use to make sure that there's enough people like
Right.
to get in and out of that trade. So that's one thing you want to keep in mind.
Yeah, so the open interest, I couldn't show it on the on Thinkorswim. So I was trying to show my option chain, but let me see if I have it in here.
Yeah, I'm used to it on my phone too, so
I don't even I'm sitting here trading like this, looking at the screens. I trade off the phone with the option chain, so I don't even know how to get to it on the for some reason it's on a different chart.